is say that it will stop these skyrocketing premiums. So if you've already received one, like this one here for $38,000, the owner of this property works for the NYPD. He's a cop. How's he going to pay $38,000 or $37,000 and change for flood insurance? He can't. Okay, so what this bill would do is it would allow 2 years to stop these flood insurance premiums from going up and give FEMA the opportunity and mandate that they complete the affordability study, which was in the original bill that they didn't do. So there would be an affordability study done that they'd have to complete within 2 years. Then FEMA would have 18 months to give to Congress a proposal on how to implement market rate premiums based on the affordability study. Then Congress would have 6 months to look at that proposal and see if it meets the intent of the Congress and that makes sure that it actually fixes the problems. Now, what if you've already received an astronomical $37,000 premium? Well, within FEMA, who administers the National Flood Insurance Program, there is already a protocol and a procedure for them to cancel this new policy, refund you any premiums you received, and then issue a new policy based on last year's rates before the increases. Now, can the new rate be nominally higher, maybe up to 5% of what it used to be? Maybe a nominal fee, but nothing more than that. Not the astronomical, ridiculous premiums that we're seeing. You know, again, to put it in perspective, Joy is here today. She owns 4 different units that she rents. This is her business. This is how she supports herself. She receives rental income from these 4 properties. Without that, she has no income. Well, because of the damage from Superstorm Sandy, she had to go and ask for some relief from the SBA. The SBA turned around and said, yes, we can help you if you immediately enroll in the National Flood Insurance Program. So she did. And the premium she received was $2,800 for the year, which was somewhat reasonable, and she paid it. Several months later, she gets a notice in the mail that because they looked at the elevations and the new flood maps, which, by the way, she was not in a flood zone before. Now she is. These new elevations, $28,000 each, times 4. That's over $100,000. She doesn't have that money. So you went from $2,800 to $28,000. The rental properties don't generate that kind of revenue. So tenfold. That's another example of how extreme these premiums are.